All right, I think we can get started. So,
Cool.
today we're going to talk about property financials and taxes. And we get a lot of questions around this time of year from our property owner clients about 1099s, rental owner statements, filing their taxes. And I thought it would be helpful to sort of collect all of the frequently asked questions, plus some other stuff that I think is going to be really useful and valuable, and share that in this format. We should have the chat and the Q&A open for everybody. So if you have questions, please put those in the Q&A box and we will address those throughout the next hour. And then we've also got a lot of RL team members tuning in today as well. So if you have specific questions, you can pop those in chat and the team will either be able to answer it or they'll be able to follow up with you after the webinar. All right, so here's what we're going to talk about today. So I'm going to do a quick introduction to myself and RL Property Management, just a 10-second history, and we're also going to show the up-to-date scorecard. We're going to take about 15 seconds to review a property opportunity, and I'll explain more about what that is. And then we're going to get into the meat of what we're going to be talking about today, which is your rental owner statements, 1099s, and income taxes. And we'll probably spend a good chunk of time on each of those. And at the end of the session today, we're going to reveal the purchase price for this property and the market rent analysis that we did for it. By the way, this is not a property that we are listing or selling. We don't do brokerage here at RL Property Management. This is just a realtor friend of RL that has it available, and I thought we'd put it up there in case anybody's looking for another investment property. All right, so first, who am I? So some of you who are in here today, I know and have met. Some of you don't know who I am at all. So I'm the CEO of RL Property Management. I co-founded the company in 2013. Prior to that, I worked as a control systems engineer for about 5 years. So I have a degree in electrical engineering. And right out of college, I graduated in 2007. I moved out here to Columbus. And Adam, my co-founder, and we purchased our first rental property in 2008. We still own that, by the way. And then in 2013, I quit my engineering job, started this company, RL Property Management. At the time, we had no clients at all and no units other than the ones that we owned. So fast forward to today, I've been at it now, whatever that is, 12 years, 13 years. I own about a half dozen rental properties with Adam, and those properties are managed by RL Property Management, of course, using the same exact processes and same exact communication and everything. I ask the team to treat those properties the same as they would your properties, so we get to experience the other side of it. Adam and I also own a local engineering company called Criterium Lisquet, and I write and speak about property management nationally. I've been doing this a while, and I like to share sort of what's working for us here at RL and share that with other property managers. I'm a details and data type of guy, so I really care about getting things right. Hopefully, you've experienced that as a client of RL. And we have a great leadership team here, but one of the things that I'm still responsible for is accounting. So we've got a couple groups that help us with accounting, but I'm still where the buck stops for making sure that your owner statements are correct, your year-end statements are correct, 1099s are filed properly, and everything else. So if there's anything wrong, I take the blame for that, and I try really hard to make sure that we don't get anything wrong because we know that's super important. Okay, so what are we doing? What is this webinar series? Well, this is a brand new thing for our company. Our mission at RL is to help property owners be successful with their real estate investments. We did a survey in one of the recent client newsletters earlier this year, at the beginning of the year, and we learned that about 2/3 of you don't have the real estate investing knowledge or confidence that you'd like to in order to feel comfortable with your rentals. Whether that's a single family, just one property that maybe you used to live in and now you're having us rent it out for you, or whether you're a seasoned, experienced investor with 10 or 20 or 40 properties that we're managing for you. We realized that a lot of you you feel like you want to know more. And as professionals in the space, this seemed like a great opportunity for us to share what we know about property management, real estate investing, how to analyze a new potential property, how to evaluate performance. So we've actually scheduled out one webinar series like this per month for the rest of this year, all oriented around the goal of helping you be successful with your rentals. These are not sales pitches. We're not going to be upselling you or trying to, get you to sign up for something. This is just a courtesy for our clients. And I think we may consider opening it up to potential clients as well. But for right now, this is really focused on you, the property owners that we work for. All right, quick update on RL Property Management. So I mentioned we were founded in 2013. Today we manage just shy of 700 total units or 700 total doors. I think I saw an update this afternoon that we're about 694. So if any of you have a 6 unit that you are just kind of keeping in your back pocket, we'd love to take that over and break through that 700 door count. We've got 33 people that work here, believe it or not, and this is an older team photo, but everyone who works at RL, all they're focused on is managing your rentals and taking care of your residents and you. As I said earlier, we don't do brokerage, we don't do association management. Like everyone who shows up at work every day, we're focused on doing things correctly for you to make your properties successful. And we've got about 330 of you that own properties that we work for. We've really done a lot of soul searching in the last year. I won't go too far down this path, but we realized that we needed to make a couple changes to make your experience as property owners even better. And so this year, it's our main focus. We are 100% focused on helping you be successful with your properties. And that extends from everything from how we communicate to how we make decisions to what we loop you in on and what we don't, how we talk about what we do. There's a whole lot of dimensions at which, this is going to be rolled out over the next year. But if you're listening to this, I want you to feel good about your decision to have RL managing your property. And I think what you'll see in the coming year is going to confirm that. So let us know if you notice any changes or if you've already noticed any changes since the end of last year, because it's a really big focus for us. All right, quick update on our company scorecard. So we're going to do this every month, and we'll drop in the chat. This is actually published right on our website. This is public. I think that makes our company a little different in that we're very transparent about our performance. This is some of the most important data having to do with your properties that we're managing. And of course, it's averaged out across the whole portfolio. But we're reporting on things like days on market, how long it takes us to turn a unit, our overall occupancy rate. So I won't read everything. You can see it on the screen. But if you have any questions about these metrics, feel free to pop those in the chat, and I'll come back and address those if we have time. But if you're ever curious, you can just go right on our website, and this is updated once a month. You can see we've already got it updated for January, which reflects December's numbers. And as soon as we flip into February, we'll update it again. And these are the numbers that we look at as a leadership team every month. They're really important to us in making sure that your properties are being well cared for, the residents are happy, which leads to more lease renewals. We keep your properties occupied. So it's a big deal to us, and it's a way that we can hold ourselves accountable by making this data public. Good question, Steve. Only the current month is on the website. We, of course, have that historical data. I think it would be interesting if we compiled that. We could look at some trend lines and stuff. So as a data person, I love that. We look at some of this in a trend line or a historical basis on our leadership scorecard that we keep internally. But for right now on the public site, we just have the latest and greatest snapshot. All right, so if you're looking to add another unit, we wanted to share this investment opportunity that one of our realtor friends shared with us. I'm kind of keeping it a little surprise, so don't Google the address. At the end of today, I'll show you both the list price and then the RL market rent analysis, basically how much we think you could rent it for, or how much we could rent it for you if you were to purchase this property. And we had to make a few assumptions about that because, of course, we've never visited the property. This isn't a sales pitch. I don't care if you buy it or not, but if you're interested, here it is, and we'll have a link to it. Just thought that would be kind of something fun to do. Okay, so the first main topic here, rental owner statements. So you all get rental owner statements every month by email. Comes as an email attachment. Lauren Begley on our team sends those out. And there's a lot to talk about with these owner statements. So I'm actually going to flip over to look at a rental owner statement so we can go through it together. Before I do that, I want to just cover some basics that you should know about rental owner statements, and then we'll kind of go through a specific example with one of my properties. So these statements, and just in case you forget what they look like, this is what they look like. So I'm sure you've gotten one of these in your email. Is that coming through okay, Andrew?
Yeah, looks great. You might want to zoom in on that PDF just a little bit.
Yeah, let me do that.
Yeah. Perfect.
So that's what it is. So just to jog your memory, we'll come back to it. So these statements run from the 11th to the 10th. And that really can throw some folks off. And I'll explain why it's like this. But when you get a rental owner statement, it's not like for like the rental owner statement that you got on January 10th, because we always do it on the 10th of every month. That was for December 11th to January 10th. It wasn't for the month of December. It wasn't for the month of January. The reason we do that is because rent payments all happen around the 1st, if we did it by the month, you'd constantly be having rent payments like straddling the month, where if a tenant pays a few days early or a few days late, you'd have months with double payments and months with no payments, and it would really kind of like look really messy and be hard to understand. So we do it on the 11th to the 10th. That way, by the 11th of the month, most rent payments are in. 90-some percent of them are by that date, and that way it looks a little cleaner. You can see your income, your expenses, and it's not like constantly jumping around. So that's why we do that. For my CPAs out there and accounting professionals, these are on a cash basis, not accrual. So what that means is when we receive a rent payment, let's say we got, July 1st's rent payment on June 28th. You're going to see it show up on your statement on June 28th, not July 1st. And same for expenses. Expenses are going to be reflected on the statement on the exact day they were paid, not necessarily the day the work was completed or when the payments were set up or anything like that. So that's all that means. And that's very normal and typical for property reporting. Okay, so let me flip over to the statement. So you can see up here, as I mentioned, the statements run from the 11th to the 10th. And you'll always have the statement date if you're curious when the statement was run. You can run these statements anytime you want on your owner portal. And you can select different dates too. But for the purposes of the monthly reporting, they just run from the 11th to the 10th. So if we scroll down here a little bit, so this is one of the properties that Adam and I own. So this is, I'm not sharing confidential client data. This is one of our properties. There's a couple things I want to show here. So you're seeing these numbers, right? Beginning cash balance, ending cash balance. What is that referring to? Well, what that's referring to is what we call the property account balance. So the way accounting works in the real estate world typically is that accounting is handled at the property level. What does that mean? So if you have a multifamily unit, let's say you have a fourplex, you might have, 1, 2, 3 Main Street units, A, B, C, and D. You can imagine a situation where you get a statement and it shows 4 separate units on this statement. The reason we do it by the property and not by the unit is because that's how the IRS expects you to report on your taxes. And we're going to get more to that later. But because the IRS is by the property, not by the unit, we set up our accounting to match that. And again, that's kind of industry standard. So what you're looking at here is the property account balance for that specific property. And if you have multiple properties with us, you're going to see multiple properties listed across here. And the account balance is all the cash that's associated with that property that belongs to that property. So whether it's rent that's come in, owner contributions that you've made, the tenant's security deposit, the maintenance reserve, which we'll talk about, all of that is reflected in this cash balance here. So basically, the 11th of December, $4,498 was present for this property in the in the property account. And at the end of the month, the same exact dollar amount was present in the account. And you can chain these together. If you have multiple rental owner statements, you can look to see that the beginning and ending cash balances match from reporting period to reporting period. So next line item on the statement is income. So typically that's just going to be rent. Then you'll see if you made any owner contributions during that time period. Then you'll see if there was any other additions, which that can be a couple different things. And then you'll see subtractions from cash here, which are expenses. And the expenses are actually broken out on page 2 in a more detailed way. So if you want to know more about these expenses, you can scroll down to page 2, and you can see here that gives you the line items. So there's a management fee here, and then repairs and maintenance. So the expenses here is just a sum of the expenses on the following page. Then you can see there was an owner draw and there was no other subtractions. And so we got to our ending cash balance here. And this last little line here shows you what this ending cash balance is made up of. Like what's left in the account that makes up this ending cash balance. And you can see here, $2,998 in security deposits and early payments, which there's almost never early payments. It's security deposits. And then our property reserve. And when it says available for payment 0, that's because this statement reflects the owner draw that we got on the 10th, which is typical. So if you look at your rental owner statement, you're going to see something very, very similar to this. You'll see the amount of your owner draw, and you should be able to check that and confirm it matches what actually was deposited into your account. Normally that hits 1 to 2 business days after the 10th. And you'll see available for payment 0. And that just means that the only money that's left in the property account is the tenant security deposit, which doesn't belong to you, doesn't belong to me, belongs to the tenant, and the property reserve, which does belong to you. That property reserve, you may remember, is money that we hold back to deal with any maintenance items that come up throughout the month. So after we do our distributions to our owners on the 10th, if there's a maintenance request that comes in on the 15th, we have some money available in your account to pay for that repair. That's what that property reserve is, or maintenance reserve. All right, that was a lot. Let me pause. Any questions, Andrew, that have come in, or if you want to pop them in chat or the Q&A, we can talk about if there's any questions on this.
No questions so far. We've got a thanks. That was a very clear, easy to understand explanation. So
great.
Hopefully everyone's on that same page.
All right, let me flip back. There's a few other things I wanted to hit on here. Talked about how it won't match the calendar month. Errors. So it's rare. We try to keep it rare, but once in a while, you may find a mistake on your statement. And it could be that some bill was charged that shouldn't have been for your property. It should have been for somebody else's, or maybe for some reason the rent didn't come in and we accidentally coded it to the wrong property or something. Again, super, super rare because honestly, most of this is automated. But it wouldn't hurt, and we recommend that owners review their owner statements every month. Try not to let it, pile up and do it quarterly or every 6 months, because the longer it's been, the harder it is to dig up and find the explanation. But we do encourage that, and of course, if there is a mistake or an error, we're going to make it right. So please communicate with us. Don't be afraid to ask questions. That's what we're here for. And we will dig in and figure out what's going on and either provide an explanation or correct the mistake if there is one. So let's just talk briefly about what happens if your property account balance goes negative. So just to flip over here one last time, hopefully I'm not making anyone dizzy by going back and forth. If this ending cash balance here drops below, really, it should never get below the level of the security deposit, because now we're kind of dipping into the tenant's money. If that were to happen, but especially if it were to go below 0, that kind of flags us to take a look at what's going on. And there's a couple different scenarios here. If you have multiple properties with us and your overall property owner balance, which is basically all of your properties together, if your overall property owner balance is positive, no big deal. It's okay for one property or another to go negative as long as the overall property balance is positive. And if you're wondering how could a property go negative, that's just simply going to happen if we pay a bill that there's not enough money in the account to pay for, and then it will go into the negative. It's kind of like, if your escrow statement on your mortgage, if you've ever seen where your escrow balance goes negative until you make a few mortgage payments, it's kind of the same idea. Um, the other situation, if you don't have multiple properties with us, or if you do and your overall balance goes negative, we will ask you to make an owner contribution to fund that negative balance and restore a positive balance. So you may have received emails like that, funding requests, and we try to be proactive and request funds before paying out a bill so that it never does go negative. But once in a while, sometimes a maintenance request will come in, we'll go ahead and approve it, and then the tenant's rent payment will bounce, right? And all of a sudden, money that we thought was there is no longer there. It gets yanked back out of our account, and now we have to contact you and make that funding request. So that's what that is. Okay, Doug had a good question. Is there a commonly accepted best practice regarding the amount of money to keep in the property reserve? So depending on which plan you're on with RL, that will affect the amount of your reserve. For those of you who have a bunch of properties with us, you're usually on some kind of a custom arrangement there. I'm not too particular about the amount that we hold in reserve for properties, as long as it meets some minimum number. If the reserve is set too low, then it's just annoying for you as the owner because we're constantly having to send you funding requests and money's just moving back and forth, and you send us money and then we distribute it right back to you the next month. So, I mean, it's usually simpler accounting wise if that property reserve stays at a high dollar amount. That way there's kind of less back and forth in funding requests. And just to clarify, that's your money. It's not a fee. It's not ours. It's your money. It's just being held in the trust account. Okay. Next big topic, 1099s. So we issued you a 1099 last week. Did you get it? I don't know if everyone got them yet. The company that handles them is a third party, and I'm never quite sure when our clients receive them. But if you haven't already received it either digitally or in the mail, you will shortly. And it probably looks something like this, except obviously it was filled in. And you might be asking yourself, what is this? Why did I get it? What do I do with it? And as a business owner, we get a million of these 1099s as well, by the way. So we also get these 1099s. So what is a 1099 and why do we issue it to you? A 1099 is simply a way for the government to track payments. Basically, it's the government's way of making sure that people aren't cheating on their taxes by not reporting income. That is what a 1099 is for. It's simply a government tool to make sure that people are basically not cheating on their taxes. So many years ago, the federal government said, if you are a property management company managing third-party properties that you don't own, anyone you're managing property for, you need to send them a 1099 by January 31st, reporting the gross income of rent that you distributed to them. And you can see how that would prevent a lot of, tax evasion, because if a property owner is getting direct deposits from us every month, they could simply just not report that rent income, and then they wouldn't have to pay taxes on it. So the government's like, we're not going to allow that. We're going to impose this burden on property managers to track all of that and issue these 1099s. So what happens when you get a 1099 is, you get a 1099, but the more important part is the government gets a copy of the 1099. That's really what it's all about. You kind of get like a courtesy copy of it, but the document exists for the government. And so when you get this, you actually don't need to do anything with it. The only thing you really need to do is just glance at it and make sure that it's correct, right? Make sure your name is on there right. Make sure your TIN, which will either be your social or if you have an EIN for a business, make sure that's correct. Make sure your mailing address is correct, and make sure the number matches about what you thought it would be. That's it. And if you do find a mistake, just email us, and there's a way to correct these. And we do every year. There's always a handful of these corrections because people forgot to give us their updated address, or there's a couple other things, that common scenarios. So you might be wondering yourself, well, if I don't need this document, what do I, how am I supposed to do my taxes? Well, the document you want to do your taxes is your year-end rental owner statement. And I believe I think we're going to talk about that. Yeah, we're going to talk about that on the next screen. But if you just take this 1099 and plug it in to do your taxes, you're going to miss out on all the deductions because the 1099 only shows the gross income, not the net income. The net income is basically what you're getting distributed, right? It's the rent that comes in minus all the expenses, including our fee. And then there's even more expenses after that, like your mortgage and everything else. So the number that you see on the 1099 is not going to be the dollars that we distributed to you through your owner distributions. It's going to be the raw dollar amount of rent that we collected on your behalf at all your properties. If you have multiple entities, you will get a 1099 for each one. And we try our best to make sure that all the right entities get all the right dollar amounts, and there's a way of setting it up on the front end so that happens automatically, and it usually works perfectly. But again, if you're a sophisticated investor with all these entities and all these properties, like just make sure that that's showing up correctly. If you didn't get it and you just like to see it, just reach out to our office. We have a way of reissuing them or helping you figure out how to retrieve them digitally, etc. Okay, any more questions on 1099s before we move on to our last major topic? We're moving pretty quick today. I thought we'd have more questions as we went. You guys loving this? This is like accounting and taxes. This is great stuff. This is highly engaging webinar content. All right, we'll keep going. Okay, income taxes. So I mentioned that we sent out a year-end owner statement to you yesterday. So you will have gotten in your email. It's a lot like your monthly owner statement, exact same format, but of course it was for January 1, 2024 to December 31st, 2024. That is the document that you will want to use to prepare your taxes or send to your CPA, right? However you're doing that. Those numbers will make their way on to this document on the screen, which is called a Schedule E. This is part of your federal income taxes. And the reason I was talking about the 1099s and how that's just your gross income. So the 1099 is going to be up here, right? It's like lines 3 and 4. That's just the income. The good stuff's down here. See all these deductions, expenses, they call them? That's what you want. You want to be able to take advantage of all the deductions that you can as a rental owner because it lowers the amount you have to pay in income tax. It's one of the beautiful things about owning rental properties. The government has set up the tax code and the tax system to really advantage rental owners. There's a reason people always talk about, investing in real estate is a great way to build wealth because it's a tax advantaged way to do so. You end up paying less. You can end up paying a lower tax rate on money earned through rentals than your primary earned income through like your W-2 job. Now, we're about to get into a bunch of like tax and accounting stuff. I am not a tax professional. This is not tax advice. I'm just sharing with you my perspectives and experiences as a property manager and as a rental owner.
Peter, before we jump into that real quick,
Yeah.
Someone asked, it looks like the security deposit from our former property manager bounced. How is that handled?
So if we get a check from another property manager when they're transferring over the security deposit, if the check bounces, we'll just record that in our system, and then we'll either need a new check from them or you'll have to get the money from them, and then we'll get it from you. If this is the same property that I think it might be, because we actually dealt with this exact issue recently, I believe we got that all sorted out already, but we can definitely follow up with you. Okay. So the year-end statement that you got, and by the way, that's a PDF. I know that's annoying. The system doesn't let us send Excel files by email, but you can go into your rental owner portal. I'll actually show you how to do that. So when you log into your rental owner portal, you're going to see, okay, I need to, all right, that's not working right. But when you log into your rental owner portal, you can go to the report section and you can run all kinds of different reports. You can run rent rolls, you can run income statements, you can run owner statements and balance sheets and all kinds of fun stuff. But if you want to get the Excel version of the statement you got by email, just go into reports, click rental owner statement. You'll go into that, then select, last year's dates, and there's an option to download either Excel or CSV or PDF. But so you take this owner statement that we emailed you, and then you're gonna have to combine that with some other data for tax purposes. And specifically, our statement is only going to reflect things that we paid on your behalf. So our management fees, utility bills, plumbing repairs, turns, anything that we're handling for you. We're of course accounting for all of that through the system. You'll see it month to month on your owner statement, and it will show up at your year-end statement as well. Anything that you paid for related to the property, we of course don't have that information, and so you'll need to combine that with your rental owner statement to fill in this Schedule E, or send it to your tax person, and they'll do that. I know it's kind of annoying. I wish there was a more streamlined way to do this. I deal with it myself on our own rentals, right? I get these statements from RL, from RL Property Management. Then I have to combine it with our own record keeping for all of our mortgage payments and everything else. So I understand it's kind of an annoying process. It's just, unfortunately, it's just how it is. So some common things, I want to make sure you don't forget these so you get all the deductions that you're entitled to. Mortgage interest. So unlike your primary residence, mortgage interest is always deductible on a rental property. On a primary residence, they changed the law a few years ago, and so most homeowners no longer qualify to deduct mortgage interest because they take some other thing. I forget the details. But that's not the case with rentals. So make sure you get that mortgage interest deduction if you have a mortgage. Property taxes, that's a big one. When you get your 1098 statement from your mortgage company, that's the statement that they issue, kind of like the 1099, but it's 1098. It definitely will show you the mortgage interest that you paid for the year, so you can just pop that in. And then it will usually also show the property taxes that they paid on your behalf. And occasionally, if they're really nice, they'll show you the insurance payments they made on your behalf as well. But even if they don't show up on the 1098, you can still go and look those things up and pop them in on the Schedule E here, and make sure you get credit for those payments because they are fully deductible. Again, this is all caveated with, I'm not a tax professional. If you have like a duplex where you live on half of it, everything I said changes because it's not 100% a rental. And I'm sure there's a million exceptions and details, but I'm just speaking in broad strokes here. Okay. Any other expenses that you paid out, such as, maybe we took over management halfway through the year. Well, you probably have your own record keeping then from the first half of the year of all the expenses that you paid out. So that will have to be combined in. Or maybe you purchased the property and handed it over to us for management. In that case, there's going to be a whole bunch of expenses associated with closing that are a mixture. Some of them are deductible and some of them have to be amortized over the life of the loan. That's where you're going to need to pull in your CPA or some powerful tax software to help you figure all that out. But we're not going to have any of those details in our statements. Another big one is depreciation. So your typical residential rental property, you get to depreciate over, I believe it's 27 and a half years. And normally it's like 80% of the purchase price of the property is allocated to the structure, 20% to the land. So if you take 80% of your purchase price, you get to deduct 1/27th of that every year off of your taxes. And that's just called depreciation. And there's all kinds of fun, fancy stuff you can do to like accelerate that depreciation. And I'll talk about this in a second, but if you're a tax professional, sometimes you end up with a loss. Actually, when you put in all these expenses, the number at the bottom is like negative, and you're like, "Whoa, wait a second! I actually made money. Why does it say negative?" Well, it's usually because of depreciation. If you're a real estate professional, you can actually use that loss to offset earned income that you made elsewhere. So that's a nice thing. Okay. The other thing you're going to see here is depreciable assets. So I know we're getting into the finer details here, but bear with me. We're going to zoom back out shortly. If we did something like an HVAC replacement for you, that's just going to show up under the expenses. Your CPA needs to take that and amortize that expense over the expected life of the asset. And this is all like IRS rules. So I forget what the rules for HVAC are, but maybe it's 15 years. So instead of being able to deduct the full cost of your HVAC, you'll be able to deduct 1/15 of the cost of the AC unit over the next 15 years. And so your CPA or your tax software will help you set up these depreciation schedules, and then that will get populated on, looks like line 18 on the Schedule E here. So it's important to get all those details right. I know it's kind of annoying, and it'd be great if we could just take the statement you get from us and pop it directly on the Schedule E with no modifications. Unfortunately, not the case. And then the last thing I'll mention, because a lot of people forget this, is travel. So if you drove to and from the property, or maybe even if you drove to and from our office, any travel related to managing this property or owning this property, you can deduct that using the IRS mileage rate, which I think is like 68 cents a mile or something like that. They change it every year. And that's another way to offset the income and reduce, the income taxes that you pay. So let me stop here for a second, because I don't have a great sense of whether what I'm telling you right now is something that you all knew already, and you're thinking to yourself, yeah, of course I knew all this. This is common sense. Anyone who owns a rental property knows all that. Or maybe it's the case that half of this is news to you and you had no idea that this was deductible and here's how the taxes work. And I'd love maybe just a little feedback in the chat of like, hey, I knew all this, or this was news to me, or because I want to tune future webinars to sort of match, what's actually going to be useful and interesting to our clients. So if you have a second, just maybe share a little bit in the chat of whether this was more of like the basics or if this was like really kind of useful and maybe new to you. Okay, just a couple other things on income taxes while you guys share that. I mentioned this already. This isn't tax advice. Talk to a professional. Don't use your 1099 alone for taxes. We covered that. Our management fee is tax deductible, and travel, we talked about that. The real estate professional thing, I mentioned that. So the IRS has really specific rules around this concept of a real estate professional. You have to meet some minimum hours threshold in a year where you're directly managing properties. So luckily I qualify that as the owner of a management company, but you may or may not meet that qualification depending on the specific circumstances of your involvement with your property or properties. So talk to a CPA about this. I can't give blanket advice, but it's definitely worth looking into, especially as you start to scale up and buy more properties. The old trick here is that kind of the stereotypical thing is that you'll have like a high earning spouse, and then the other spouse, it's like, oh, go get your realtor's license and transact a few properties. And that way we'll get the real estate professional tax status, because it applies to, if you married, filed jointly, it applies to the whole return. And that lets you offset this depreciation from your earned income from the high earner. So that's the old playbook is, you have a high earner and then the other person goes and gets their real estate license and sells a few houses every year. So, okay, questions? Jeff has a question here with regard to RL taken as a whole. You mentioned 330 property owners. For most of the owners, how many units do they own? So the majority of our clients own one unit. And then it's kind of like a power law. I don't know if that's the right thing, but like the further out you go on that, our biggest client I think has 40 or so. And then the next biggest client has like 30, and then it's 20, and it goes down really fast. So, but I think it's like 60% of our clients only have one unit. So we're very well set up to work with single unit owners. Sometimes I think people get the idea like, oh, like I'm small, they're not going to pay attention to me, or they don't care. We definitely do, because that's that's most of our clients. And if we weren't doing a good job there, we'd lose we'd lose more than half our business. So that hope that answers that.
Peter, I have a question about that list of things to add and combine. We send them the year-end owner statement. Um, that they use that to fill in that form. Is there anything that's on that list or anything not on that list that obviously they're hiring a property management company to take care of a lot of this for them? Hopefully, most of it's on that owner statement. But is there anything that, these owners might want to really keep top of mind all year and keep track of on their own to add to that list or that goes into that list?
The biggest thing is the mortgage.
Okay.
You don't really need to keep track of it all throughout the year. Just make sure when you get that 1098 from your lender, that's going to have the data that you need to get that mortgage interest deduction. The other one that you really should track through the year would be your mileage. So trips
Okay.
to and from the property, trips to and from the hardware store, trips to and from the lender and the bank and our office. Like if it's related to the property, keep track of your mileage and then deduct that, at the end of the year.
Everything else is pretty much just a straightforward year-end number
Yeah.
that is easy to, okay, cool.
Yep. All right, before we do the reveal on the property I showed at the beginning, just wanted to do a quick teaser for next month's webinar. It's I think we set this up to be the fourth Wednesday of every month or something like that moving
That's
forward.
right.
But
Yep.
yeah, so same time, and we're going to be going deep on how to calculate and track your return on investment. So if you own one property or if you own 10 properties, how do you know if you're actually making money? Like, how do you know if the property's adding to your wealth? Because it's a lot more complicated than just looking at even your year end statement. Like, there's a lot more that goes into like principal pay down and appreciation and the tax benefits. So I want to walk everyone through how I think about real estate investing, having observed literally thousands of units and properties come through our offices over the last 11, 12 years, seeing which owners consistently build wealth and who doesn't, and how to analyze that, how I think about it. Like if a friend of mine comes to me and says, "Hey, should I buy this property?" I'm going to explain to you what I would explain to them, how I think about it as somebody who's in this all day, every day. Okay, so we'll drop a link to register for that upcoming webinar. And all right, here's our property. So 979 Bootman Drive. This is in our service area. This is listed for sale at $279,900. We believe it could rent for $2,049 a month. And you can see some of our math over here. If you are ever looking at a potential property and you're deciding whether or not you should buy it and turn it into a rental, we're always happy to do a market rent analysis. That's a free service we offer for our property owner clients. And you will get a nice PDF that looks a lot like this with a lot of our assumptions and some info that we researched. And in the end, you'll get a range and then a recommended list price. And this is going to vary quite a bit depending on a lot of factors, right? Even something like the time of year is going to affect the rent that we may be able to get for you. So if you like this property, you think maybe you want to learn some more, there's a link to the property that's going to be dropped. And then you can call Howard Hanna, and we got their phone number there. The team there at one of their local offices that we work with sometimes has this listing. That's all I got. So I'll stick around for questions. The team is here. I know we have a bunch of RL team members here as well. If you want to drop a question in the chat, we'll follow up with you. I really hope this was helpful. And if you have feedback on these webinars, content, format, love to hear that either in the chat or you can email me or just anyone on the team.
Just as a refresh, I put next month's webinar registration link in there. I also linked to this property. And then Peter, I am going to put, in case anyone is looking at a property, like you said, and wants to get that free rent evaluation to see what we think it would rent for, they can fill out a form on our website and include the property you're looking at, the property you're considering, maybe one that you own and you're curious about that we maybe don't currently manage, and we'll fill that out and get it back to you within a day or two.
Perfect. I see that link there. Thank you, Andrew.
Mm-hmm.
All right, we'll give you back 15 minutes today. Thanks, everybody.